Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. This stream's about integrating bookmap order flow tools with auction market theory using a volume profile as a chassis to overlay trades on. It is based on market mechanics, how the market works, why it does what it does, and how you might get in alignment with it at times using structured trades. And these trades are available to everyone in the Bookmap Discord Trader Lab community, which is a no-cost community of like-minded traders who come together to build out the business of trading. Business of trading is pretty different, I think, from what most of us think it is. It is a statistically based process, not a predictive one. And by statistics, we're talking about edge. And edge is really a distribution of probabilities of random outcomes over a large sample size of interaction with the process and in here with the other participants. So that means we are continually in a condition of uncertainty, which takes a lot in the sense of how to manage your emotional states when we are triggered by fight and flight. And there are processes that you may be able to put together to help you manage your emotional triggers, which is just part of our wiring. So if we understand some of the obstacles and we understand potentially some of the solutions, maybe there's a cohesive plan that can be put together that may give you the opportunity to participate and maybe even create a career in the business of trading. And I will say to everybody that it takes a lot of work to get from what we imagine it is to what it really is, and also to be able to function on a consistent basis in a random environment. The thing is that as humans, our wiring is to seek certainty. So most retail traders embark on creating predictability. And in fact, it might even seem semantic, but you can't predict anything in the market. And today is a good example of not being able to predict anything. So if the energy then, or our effort, is not put into predicting, which is really not possible, then maybe it can be put into operating in randomness. And while they may seem similar, they're really not. So the purpose of the Trader Lab is to help traders understand the process of trading, the business of trading. And then it's up to each individual trader to craft using tools that I share and others now share in the Trader Lab, using tools to develop a business that you can actually see has a statistical edge. And that edge is what provides you a tangible control, if you will, to manage your emotional states. So that, and like the casinos, they only play games that have an edge, and they're not emotionally attached to the outcome. They're not fearful that a gambler is going to get paid. Well, we need to learn not to be fearful that we're going to take a stop, so that we don't skip trades, bail out of trades, micromanage trades, and do everything that is not in our best interest from a business point of view. And yes, the gamblers get paid, and yes, all businesses have cost of production and overhead. And we need to kind of understand that. So the successful model that we might want to consider is one that we already know, and that is gaming. And gaming is strictly a statistically based business model. So that's the basis of the Trader Lab. I share 60 PDFs of structured trades that are available to all of you. There's no cost to be part of join Trader Lab community, plus a library of webinars that you can look at, and then you build out a plan based on your psychology, your time frame. You want to be a short-term trader, or are you in for the bigger moves? That is a function of psychological alignment, and that is part of building out the business side of trading. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Your mileage may vary. And please grab a pen and a piece of paper. I'm going to start out the way I always do. Since this is a gaming process or a statistically based business, if you will, and I'm not suggesting you accept that. I'm just going to say it's a way that you might organize how you approach this. Grab your pen and paper. I'm going to give you a couple of notes. And again, there's not one way to trade. But based on the success rate for retail traders, there might be maybe other ways to approach it. By the way, this is what these PDFs look like. These are actual trades. These are trades I've taken, plus just other screenshots, explanations of some of what you're going to see here in the stream. And when I did these, and this is like from 2020, just so you know, I am not a vendor. There is no specific course. There's no cost to this whole thing. I did these because traders were asking me, what are you doing? Would you mind? And so I started doing these to help other traders. So that's kind of what created the Trader Lab, was other traders asking, and then Bookmap asked me if I would consider giving some time to help other traders. So that's kind of where this all came from. It is now a community of like-minded traders who come together to leverage their collective experience. And it doesn't matter how you approach the market. The thing about it is do you have a consistent process that actually has a statistical edge, or are you just chasing with doing something that I used to do called Trader Groundhog Day, which is doing the same process and always seeing it break down and trying to fix it. And a lot of effort, a lot of years went into that. But in the end, I always woke up in the same place. So I get excited. I think I finally got it, the right mix of indicators and time frames. And then, of course, that didn't work. So I had to do something different. And that's kind of where I came from. And that took me, I'm still working on it, by the way, and I'm going on 45 years. So let's take a look. This is yesterday's settlement. This is the ETH low. This is the naked volume point of control. Now, if you're not familiar with volume profile, I'll just give you a 30-second thing on it. What is a volume profile? All it is participant behavior is represented by volume. And in volume profile is very much like shopping. So the analogy is the purpose of the market is to figure out what's too high, what's too low. That's it. And the market either accepts a price range where everybody's willing to do business and we rotate or consolidate, or we leave it and then we run off in a directional move to find an extreme where we might entice the other side to interact. So if the market runs like a bullet up like it did today, and then we find sellers up there, and it can be a news event or it can be anything that changes the perception of value, we can then get a reaction to it. By the way, if you're going to DM me, I cannot respond to direct messages. Please post them in the Bookmap Discord Trader Lab community. I just get too many of them, and I really just can't respond. So you could help me out by just doing that, because there's a lot of great traders and great developing traders in the Trader Lab, and they can direct you if you're looking for information or other items. So here's some information. So the RTH Open, I got a little bit more to tell you about here. I'm going to show you the levels. Now remember, auction market theory, which is the basis of how the market works, not your indicators. I'm going into a place that is really a pure explanation of how the market works. When you use indicators, which is fine, you are really translating price-based behavior or derivative. But I don't use any indicators. I found that my indicator is an understanding of order flow using Bookmap, market structure, and then levels that are created actually by the shoppers. So here's the RTH Open. This is the ETH overnight volume point of control. This is like the most the high volume price from the ETH. Yesterday, this was the highest volume price from the RTH, and this is the settlement. So the way the language might work is this is too low, this is retail, that's the ETH high, that's the ETH mid. Let me give you a couple quick statistics. So we opened higher inside of yesterday's range. So write these down. In past performance, not indicative future results, you've got to vet everything, whether it's here or anyplace else. So in other words, you got to do the work. And when you do the work, it develops confidence. So there's an 83%. Now remember where we're opening. So I'm opening here. So it's not material. There's an 83% probability we'll get here. But what about this? Let's look at this one. There's a 70% probability we'll get here. And again, you've got to vet these for yourself. The ETH mid, there is an 83% probability we'll get here. So 83% to get here, 70% to get there. Now let's go to the ETH high. What about that one? Only 50% probability. But what about yesterday's high? Let me see if I can find that one for you. I got a lot of statistics here. About a 40% probability. But now, that's just raw statistics. Let me give you some other items here. A little thought process. So let's look at this. To take out the first hour's high, I just got to find these again, because you're going to find some of this interesting. 69% probability. That's this. A 69% probability. And to take out both the first hour's high and the first hour's low, which is there, about a 29% probability. Again, you got to vet these for yourselves. Now let's step back. Those are just statistics. They have nothing to do with what will happen. It's only what might happen. And the thing about trading is, if it's random, which let's accept for a moment it might be, then we don't know how, we don't know if, and we don't know when. So that is all that randomness and uncertainty that really gets us psychologically. You know, we want certainty, we're afraid. Oh, are you going to acknowledge your fear? Because that's what it is. Moving your stop, bailing out, not taking the next trade, all that's because of fear. And that's okay, because we're all fearful. The difference is, can you understand what triggers the fear? Can you do something about it? Because you're still going to take stops. Doesn't matter. You're also going to have winning trades, even if you just close your eyes and push a random button, buy or sell. How about that? So all that is possible. So let's go back now and think about what happened. Yesterday, we had a target here. The high of the day yesterday was here. If you remember in the stream, that was our upside target. Okay. Now I figured, and then we did the Acapulco cliff dive yesterday, right? And everybody got thrown under the bus. So we went up in the morning, hit our target, that became a short, and then we ended up coming down here. It was pretty, interesting day, like they all are. But now what does that tell us? The market is long, the market goes up to go down, and the market goes down to go up. Wonderful. So if we anticipate, if the market is long and it's been going up, we would anticipate a shakeout of weak longs before it might continue higher. And this is when I talk about market mechanics. We always need to be thinking about what might happen. We can't predict what will happen. So, and I always say quite often at the start of these streams, what does the market do? The market goes up to go down, and then it goes down to go up. What is that about? It's because in the rotational aspect of the market, there's always two sides interacting, and one side will get offside. And in any time frame of fractal, that's what's really happening in rotation. So it doesn't matter if you're trading a short time frame, 3-point, 4-point rotation, or you're trading 15, 20-point rotations. The behavior is the same. So that's why we rotate. Because there's two sides always, and there's always going to be traders with stops on the opposite side. And if we counter rotate, those stops get activated, and that creates these rotations. So that's what happened yesterday. We went up to target, and by the way, the fact that that was the high of the day, I always consider that a pleasurable coincidence, because there's many times nothing happens that we want to have happen, right? So, naked volume pointer control. Yesterday's target. So we opened in the middle. Now this, I had, for me, this was kind of problematic in the morning. Now here's what I was looking for. My plan today was for selling first down to these targets, possibly, and then longs going up. Okay. So, And the reason for that was we went down yesterday. I had the 70% probability here and whatever the overnight mid was, which is like about an 83% probability. So my plan was, we'll let it get going, have it come down somewhere, either here, or even here, any of these areas, and then look for the longs to come back across and for the trend to continue. The early selling, so you understand the way I think about it, the early selling would get shorts in the market, which would become buyers. So that's the psychology. Now let's get into the actual trades. And if you have questions, please post them. Now, I found the open, well, you'll see what happened here. So market opens. Now, let's think very carefully about this. This is the open, RTH open. I'm opening on top of the ETH volume point of control. This is where most of the buying and selling took place in the ETH. So think of this like a fair price. If it is a fair price, then we can rotate around it. So I anticipate two-sided trade, but because of my statistics, which are the highest coming down in this direction, I'm looking for this first. So I'm just telling you. And I know it could do anything. So this is also part of the joy. So right here, we open. I have a little bump up. This is my opening swing high. I'm going to label it just so we don't forget where it is. When I see an opening swing, I always mark the opposite side. And the reason for that is because I anticipate, and that's all I have, that if I get selling here, that there's going to be buy stops here, and that we might come up around. And then if I see selling, then I can go on to my target. So I find this rather nerve-wracking and annoying. But I have to be very careful. And I always suggest in Trader Lab, this is not a place to start trading. It's the place to start recognizing potential behavior. So it's a place to learn to read in quick, because this is very fast. This is 1 minute. So you can see the speed. This is why I always suggest developing traders, observe it, don't trade it. Observe it. So I get my early sellers, looks like it's going to zero. So I'm looking at this and I'm saying, wow, I got to be ready to get long. Here's my targets, right? So it comes down. It does not hit my target. I come up and I know my opening swing is here. I come up above here and I see some stops coming out. I have liquidity in here, iceberg, and I see absorption here. So I got my delta here and I got absorption. That's the absorption detector. I come back and check it. Now, I have no clue. This is also possible. So I'm in a what's going on mode because I don't know. So right here, I see micro high volume. I see my seller. So what I'm thinking, and I'm just telling you what, because it's based on a plan, and my plan is as good as bad as probably anybody else's, and I do take stops. So if you're not into taking stops to protect your account, then trading probably isn't for you, because that's part of the business, cost of production overhead. So anyway, I'm looking for my sellers. I see these guys that get squeezed. I come out here. I see an interaction here. I see a break. I see a test, and my sellers take over again, and I come back down. And remember, I'm right at the retail price from the ETH. I'm taking my time. I want you to know the process. So I'm thinking I'm in two-sided trade, and I'm going for this. So my first trade I'm looking for, especially since I cleared this out, and I see my seller here is a short. So I break under here. I test here. If it's now too high and this is too high, I'm looking for my short to get my statistic here and down here maybe. VPOC migration. Everything is good. This is a structured trade. Now, guess what happens? I get stopped out. Okay? Stopped out. So now I'm going, wow, that's, a surprise. I mean, it's It's a surprise in the sense that the trade didn't work. It's nothing more than that. So I come up now to the ETH high. Now up here, so this is a potential target, yet I'm thinking because I'm where I am over here, and now my developing volume point of control is here, I have the possibility for something called mean reversion. So all that happened here, so you understand, is this to this to this. So I'm in a rotational trade, but I thought here that it was going to break down. So I'm just telling you. So I come back and test here, right? So, I'm just going, well, what? I come up, I see my high volume here. I get my overnight high right here. I see seller. So I'm now thinking I'm going to be in rotation, and I'm a bit confused. I'm just telling you, I'm just sitting here going, what's going on? I don't know what's going on. You'll notice what's going on here is that it's a rotational trade, and I'm coming back here, but I'm not getting below it. So right in here, I am really confused. But this is what I know. I know my short failed. I know I'm making higher highs, and I'm looking here, and I see, now I'm going to show you something very subtle. I see this, and I'm coming back here. I get VPOC migration. So right here, I look at this, and I'm going, wow. I said, this, let me come back here. I got to mark these. And this was confusing for me. I mean, I'm not that I don't get confused. I'm actually confused a lot of the time because I'm in a random environment. So I don't have anything that's, quote, sure. And I know now, microstructure, too low, this shifts up. This is now equal with this. So I'm still in balance. And I'm anticipating we may come back in again. But now it's going to change. And I'm going to show you the change. This is VPOC migration. What does it say? Now we're in a language of sorts. It's now saying this is too low and this is too low. Right here, I get the VPOC migration. I break low. So I'm going, if I don't clear this here, then I'm going to come down. So, but this is my support. So I have support, resistance. That's how I see this. And resistance in the microstructure is here, right in here. I'm going to put a little line on here so you can see this. So I'm completely baffled right here because this looks like a short, this looks like a long or a reversion down. This is where it changes. When I break above this here, it's saying potentially too low. I tested the mid in the VWAP. Right here, I'm looking for this. It does something different. As soon as I get a different behavior, I'm now looking for a long. And the volume is in here. So right in here, until I come across this, I'm thinking it's going down. Breaks across. This sets up a long. Now, let me show you. Where does it go? Here. What was our target yesterday? Here. Where did it go? Here. No clue. This was my target. Okay? So I get the long, I get a scale. I'm thinking this has a high probability. I'm going to get this, and not so much. One moment, please. Okay, sorry about that. So get taken out. And I believe this was a report that was the unemployment report that was revised. And the market, when a new input comes on the market freaks. And especially if it changes a perception of value. So the market has to auction. So this was a report, and then now here's another piece about this. As soon as this happened, I looked at it and I said, well, this is a key level. This was my target. I didn't get there. This was the level. And there's no way for me to know we're not, because don't forget my plan was for today. get long to continue with the trend. That was my plan. So when this happened here, I had my scale. I saw this. I said, "Oh, this is bad," and but there's no way to know. You get this, and then I get the break. Now I have my volume up here. I think it was, let me try to remember what happened over here. Yeah, we came down. Now let me just show you how this works. Now this is a shock, and I mean by a shock is it's out of left field. I can't do anything with it. But what do I remember from my plan for today? I have this, and I have this for potential longs. So the market does the cliff dive, and I'm sitting here, going, what's going on? Because that's pretty much about it. And I see this. This is absorption. I hit this target. Now I have two targets. I got this one and this one, right? So I see my buyer. I see absorption. I'm going to show you the microstructure just so you can kind of see it. So this is where my volume is. I break high, which is saying this area is too low. I hit my target, and I took along here, and this is called mean reversion. And it comes back here. So that's the target. And then it's hold to potentially come up go to the other side. Now, let's look a little further. It pulls out here. Now, this is also another long, but you're only going here. The better trade is out here, back to there. This gives you another long, and here's the structure. You can see it there. High volume node, there. So here's absorption. Chop, 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 break high. This is a Trader Lab trigger. Pull back. This is your volume. You can see it there. The way a profile works is it's this, a consolidation. The high volume is like a retail price in this area. So most of the volume is here. We had an excess down here. That's a delta showing you a seller. They were absorbed. Then the buyers take control. The sellers take another shot. If these sellers cannot get below here, then the buyers take over. So they're absorbed here. These guys were absorbed. They were absorbed. So all this is buyers under here. And now the buyers take over. And then this is your target. And then it's wherever. And the wherever is trade management. And there is another target up here. And you're going to ask me, where is it? It's right there. It was on the price map. So the target was yesterday's high, remember? And we got disrupted. Then we took out the IB. At IB high, there's over a 90% probability we'll take out either the first hour's high or low. Considering the trend is up, everything for me is going on the long side, other than the Acapulco cliff dive. So this is the next target. And these are higher time frame targets. So that's the next target. So basically it's to here, then to here, and then there's more, but never got there. So to here. And then we can go here, wherever we go, we go. That long worked out pretty nice. Now there's more. What about a short from here? Let me show it to you. Now, these levels are on the chart. Now, I don't know what will happen ever, so don't think you can predict. If you want to predict something, you can't, at least in trading, I can't. So I've kind of stopped trying to do that. But here's what I know. I have a target. I do not know what will happen. That I don't. So when I come up to these levels, and now here's what I'm seeing up here, by the way. I'm seeing a stop. This is stop sweep. I'm seeing a sweep. So things are rocking. I come to my level. Here's my volume. Right here. So I'm at my level. I have resting liquidity there in the book. So there's alignment. If you have an order flow tool like Bookmap, you'll see this. This is passive. They're sitting. That's what's in the limit order book. So this is sitting here at the time, and I got a level. So who knows? And as far as I know, it's going to keep going. That part doesn't exist in my world. But when I come here, I'm looking. Now these guys pull, so I'm thinking it's going to continue. Buyers, sellers right here. So this now is going to be a consolidation. Buyers, looks like it's going to the moon. What happens here? Sellers. Sellers take over here. Now I see this, and basically what this is creating is now two-sided trade. So there's always two sides in the market, right? But right here is a consolidation. I break high. I have selling icebergs, stop an iceberg detector, and the sellers take control. I pull back to the volume. I have alignment, and this is now a suspect. If I can't get above this area, this volume, because this is where the sellers took over and the volume was here. If this volume becomes too high, think of it like a store consolidation. It's a store, and in this store, the S&Ps cost this. If it's too much, and I check it, and I can't get back above here, then the possibility exists to come all the way back down. It's called mean reversion. This is a short. Now, to here. And then out here. Back to here. That's a target. Now, remember these levels, right? To here. What is this? I know. You're going to go, what is it? It's a long to here. Because in the Trader Lab, they'll remember 70% probability. So it's a long to here. And what is this called? Mean reversion. What is this? Outside in trading. Back to here. And then where to? Possibly back here. And I posted this in Trader Lab. So what it is here, scale, scale, and then this was the next possible target to come out here. And that runner got taken out. That's the last trade for me. So it looks like yesterday low might be on the hip parade. That's as far as I got. I mean, that's all I had so far for today. And for me, I had no short here. It's trade management for me. So I hope you got something out of this little narrative. It's that kind of day. Yeah. How we doing? So let's look at another trade that's a little more advanced than Trader Lab. Now, I haven't seen these because I'm not looking at the market, but I'm going to talk to you about it. Now, we have what's called the neutral day. That means both sides are active in here. We ejected the top, and it looked like we were, and this here set up a long. So I want you to see structure. So, and this set up this long from here to here, and then the idea is to come back up here, which it didn't do. So once we break down and we get, there's two trades here, two possible trades. Once we break down and we come back under here, there's a possible short here. I'm saying possible. And there's also, if we come under here, short here. So I'm going to show you both. And I haven't seen this, so I don't even know if there was a trade over here. Actually, let's come back over here. Got to take you someplace else first. Let me just get this set up correctly. This has to go. Let me just get rid of this. So this is where the long was. I can get it over here. Down here. This was the long, I think, right? I can't remember now. Boom, boom. Yeah, this. So right in here, you have your high volume. So you've got micro high volume in here. I'm just going to label it so we have a little something in here. And then this here. I think it's here. Just so we have some reference, okay? For the long. Now, this is what's important here. And this is important, the IB low. So you can see it. This is the first hour's low. We have a couple trades here. Long from here or long from here back to the VPOC. All right, so that's the long trade I just showed you. Now, as far as I know, it's just going to come across. So I have no idea. Yeah. But this is the primary trade. It's called mean reversion. So that was the long. Now we fall out, which is, and we get to the mid. So, right here is, problem in River City. So now there's a couple ways into this. First thing is we didn't get above the mid and we checked the VWAP and the VPOC. If this is too high, let me give you the concept here. If this is too low, which is what this is about, and then we come back and this becomes too high, which you don't know until hindsight, then the possibility is we can come back and check this or this down here, one or the other. So, too high, no way to know. Now it's coming down. Now what? Well, there's a possibility of this to this. Now, and the range on this is only is 23 to 17. It's viable, but let's just look at it. And I'm not saying anybody ought to get involved. Where's my levels? Let's look. I have this level here. I have the IB here. So I break below, I test it. Now, subject to your plan, this could be a short and you're going for that right there. And then you would hold it and you're going for yesterday's low. And now there's another trade here. We come back here and we're going to check this again and this. Let's watch for behavior here. These are not trade recommendations. These are actually advanced processes. So this now is support and resistance is here. And we have to watch the behavior right around here. So, and by the way, see we have 5,000 icebergs here. So the buyers were in here. This is absorption. So the buyers came after it here. So you need to be aware of this. So for me, I don't have a long here. It's either trade management and potentially, if we can't get back above here, we do have the potential to take out yesterday's low, which may or may not be appropriate. Remember, yesterday we had loads of iceberg buying. So we're seeing it again. So we have to be conscious of that. And this might be an extreme. I don't know. So I can't, there's no way to know. But we have structure here. So let's just watch the behavior. These are not trade recommendations. If you don't have a structured or vetted trade in this condition, then there's no trade. This is not a structured trade. It is an area to observe. This is an area to observe. These are areas to observe. And we might be done, no idea. Not an easy day to trade, if there ever is such a thing. But today was not a pleasant experience. It was very fast, very hard for me to trade. So there's some good trades in here, but very hard to trade. So if you had a hard time today, that is part of trading. Um, very volatile. The thing that's interesting about a day like today is the ranges of the rotations. So there's a lot of opportunity, but the speed really means you have to anticipate the trades where they might come and already have a plan for them. It's not like, well, should I get long here? If you don't have a trade here, then there's no trade. There's nothing for you to do. That is one of the things about the business side of trading is if you don't have a trade, you don't trade. You just wait for a trade. A lot of trades will come by during the day. So if we come back inside here, the IB, and we have to be careful because we have yesterday's low below us. It is possible. And we're in two-sided trade. We can still come back here and mean revert and still come back out the other side. The way I think about these things is we had buyers here, sell stops are here. We got them out. We have icebergs buying here. There's shorts in this leg. They can get squeezed and we can come back here. So it's a outside in trade potentially, but it's very messy for me because here's what you had. This was a good long. So we took them out. Now the icebergs are in here. We had icebergs here, but we got 5,000 and more executing here. That is something that's important to pay attention to. And if they're absorbing the sellers, then it's possible that the other sellers in this leg can get squeezed. Not a recommendation, it's just possibilities. If you don't have a trade out here, then you're just sitting. Because the job is really to wait for the trades that have an edge, not just to go, I think it's going up, or here it looks like it's going down. That's not how trading works, at least sustainable trading. It's okay for gambling and dopamine and adrenaline, but it's not okay in the business. That's what I've found. So we've all done that kind of thing. Anyway, do you guys have questions? You're interested in order flow, VGT, in the YouTube? Well, order flow is a tool, and you got to find it's a sophisticated, it's a high end tool. There's no black, white, go, stop. There's no such thing in trading. You have to understand what parts of the tools work for you. I use a stop and iceberg detector. Other traders don't use it. I use absorption. What does it mean? If you understand what these things mean, you could turn it into an asset. This tells me that the sellers, which are the red bubbles or delta, are being absorbed. And there's 5,000 icebergs. Is it useful to me to know that a potentially more sophisticated participant is buying when the market's going down? Does that give me insight to help me, if I have a vetted process, to be on the lookout for a potential reversal? And if there is a reversal, what else do I know? I know there's shorts in this leg. And I know if I can come up, I can begin squeezing these guys out. And I also know that the fact that there's 5,000 iceberg doesn't mean that that's the low of anything. I know it's a random, but I also understand from work, study, that these are important material pieces of information. Now, what else is important? Well, if I see a stop sweep, is that material to me? Well, if it isn't, I'll turn it off. I don't need it. It's important for me to know in the auction what levels are important based on the participant behavior. Well, it is for me. I don't use indicators. Is it important for me to know that statistically there is a 70% probability to come here? It is. And there's a probability to get down here. Yes, it is. If I come here and I see buying, what does that tell me? There's a possibility, and that's all you have, to come back here. That's what all this tells me. It doesn't tell me what it'll do. So yeah, order flow. Is there too many indicators? There aren't any indicators on this chart. There is information though. So it depends what you call an indicator. Trading is not red light, green light. There is no such thing in trading. It is really process and interpretation of what participant behavior reveals, and then probabilities of behavior. And in Trader Lab, what we do is study different market mechanics and behaviors. The behavior, and this is not a trade recommendation, this will come here. If we understand that behavior, can we then use the insights that an order flow tool provides to help us get in alignment with the potential, not the prediction, because there is no such thing, the potential. If I understand this, what it means, and I see, now let me tell you what else I see here. The green box is absorption. Those are the buyers absorbing the red bubbles. Red bubbles are delta. Delta is market orders and stops. That's the stops. So I got sellers and I got buyers. Well, okay. Now what? I have my sellers down here and I have my seller here. And there's an iceberg. This is absorption here. If my buyers take control right here, I can be looking at this as a long or nothing if subject to my plan. And if the market goes higher from here and it needs to get through this, and if it does, I'm going here, here, here. I think that's okay. Is it worth it for me to take risk in this area for this? Let me see. So yeah, I got to risk 3 points, 4 points, whatever, subject to where I enter. I need to get risk neutral, so I need a scale, which would probably be up in here. And then I'm going for this. And if I don't get a scale, I take a full stop. If I get a scale, I scratch. If it gets to my target, even if I'm only running a 2-lot, it could be almost a 15-point trade. So yeah, that's what this does. Does that make sense? How we doing in YouTube, guys? Hope you're getting something out of this. This is kind of a frenetic day, a kind of frantic thing. But the thing about Trader Lab, so you understand, we don't know what will happen. That's a given, and neither do you. But here's what we know. We have structured trades. We know what to look for and where to look for it. We also know if there's certain phenomena that we can observe in the order flow, and we get triggers that are Trader Lab triggers that would be vetted, you would be waiting for the trade. It's like waiting for a bus. And then we are looking to come across here. Now, it's possible we will see some selling right in here. And that might be the end of this rotation. That's okay. If we get into this, then we're coming here and here. If we don't get into it, then the trade can fail. So the scale from entry has to be right in here. This is Trader Lab. Now, I'm not saying the trade's going to work because I'm no idea. It's not my job. My job is to have done all the work outside of trading hours and to be waiting for locations here, here. Value area low, by the way, is a target. Let me just find a statistic on it, if I can find it. 71% probability we'll get here. Now, when I'm thinking about getting long, I am not thinking about these statistics. But when I come down, I'm looking at this, 70%, the overnight low. Let me just bring you back to some of these. And you'll notice there's no order because it's random. There's a 66% probability to get there, and the value area low, which clueless, 71%. Who knows? And we could take this out too. I don't know. Not my job. My job is to understand how the market works, why it does what it does, and at times get in alignment. And when I'm not in alignment, I either don't have a trade or I take a stop. That's as deep as this is. We can make it as complicated as we want, but I have to tell you, trading is random. It is always uncertain, and we're always going to be fearful, and we're always going to hesitate because of our fear. We want confirmation. And confirmation means more risk, not a better outcome necessarily. I find that if I can anticipate a trade, I want to get on it as quickly as I can. And the reason being is the quicker I execute, the lower my risk and the quicker to get risk neutral. Anyway, this is where we're going on the long. I'm not saying it's a good trade. I'm not saying anything about it because I'm clueless. So there's a couple possibilities. You're long from out here, or you're long from in here. But there's much more risk. The trade is really out in here against this, okay? So now when it's under here, why wouldn't it go there? When we come across it and we see, remember, the absorption. I want you to put the pieces together. This is where the order flow comes in, because the order flow is what's telling me what's happening here. If I'm just looking at a candle or an oscillator or something, what do I see here? I don't see anything here. I just see the Acapulco cliff dive. I wouldn't know there's absorption, and I wouldn't know right here the behavior is changing, because this is, taking place right in, 2 minutes or a minute. And I wouldn't know necessarily there's absorption here. And I certainly wouldn't know about the icebergs. And I see the buyer. Now, right here is the microstructure. And right here, there's a break high. This is the outside edge. I'm going to show you what this looks like. Now, I do this, and you could do this, when you got to use a drawing tool to get used to recognizing what's happening. This is a consolidation. So it's too low, too high, too low, and we break out. We pull back. We test here, and I get my buyers. This is a long here, and your stop has to be under here. Let's look a little further. What was too high up here? This. I get my chop, chop, chop here. This chop, chop is the same as this chop, chop. This chop, chop is a consolidation. All of these microstructures are auctions. And I always think of them like little stores. It's probably the easiest way to mentally get your brain aligned with what's happening here. Too low, too high, and you're seeing the interaction. When one side takes over, and remember what's backing us up, the absorption in the icebergs, then you have a long. Now, how do you activate here? It takes intentional practice, a lot of research, screenshots, and over and over seeing the same behaviors, and then teaching yourself to recognize it. You got to put the work in, everybody. I mean, if you want to do this as a business, think about if you want to start a business, or even, what do you got to do to become proficient? Well, this is a language of the market. How do you speak a foreign language, or even play a musical instrument? That's what this is. This is a language. So it's not indicators. And I understand indicators, they're just translators. Well, my quote indicator is participant behavior and volume, because volume tells me right there that this was a retail price because of high volume. And if I leave it, it is saying it's too low. This is high volume from yesterday. It was the fair price. If I come down to it, is a potential long. Okay. Now, the idea to understand levels, when we first came down to it, it was a long. When we came under it, If we couldn't get back above it, then we could go lower. What did we do? I see the buyer here. We break above it. This could be along here. You're aggressive and you understand what's going on, and it's just a random trade. You could be long here, or you could be long here with this. Then you're coming through this and you're still going for that. These are all structured trades. It's a matter of your structure, your trade, and vetting them. Hope that makes sense. I'm getting a question about my absorption settings. Let's go take a look. There's loads of additional things you can do here, by the way. Tools. Sweeps, absorption. Okay, here, let's look. 0.1 seconds, 124, make it 125, doesn't matter. That's it. So there's got to be 125, at least 125 traded volume in, was that 1/10 of a second? So that shows that a lot of volume went through, and then it'll put a little box there. That's it. Let's see what else I got here that might be interesting. Gee whiz. And on the icebergs, thought I had a filter on there. Let me see. Find the right one here. I'm showing everything on the icebergs because I want to see them all. So anyway, that's kind of the, and by the way, all the add-ons are managed here. When there's an update, it'll let you know, you update them. There's a lot more here. Footprint chart, filters for any noise in the heat map. And I don't have time to go over these, but if you go to bookmap.com, you can kind of cruise around and look what all these tools do and how they might help you. I certainly don't use all of them. I have I play with them, of course, and tested them, and I even work with developers, Bookmap developers on ideas, but I find, what do I need? And I'm a minimalist, so if something doesn't contribute to what I do, or if it's repetitive, you know what I mean, in a sense where it's just more, I'm a minimalist, because if I have more inputs, it creates conflict. And I did a primer webinar that talks about anchored inputs versus random inputs. You can't measure if the market is random, something needs to be anchored. The casinos play games that are anchored. That means blackjack, 7 cards, not 10, not 12, 7. And that's the only way they can extract their edge. Trading, if you will, structured trades or setups are anchored. Most retail traders are using a multiple indicators and timeframes. So, and they're not using it all the same way. It's random. As soon as you're in that random environment, you don't have an edge, because you don't know what it is. And you use your P&L to think that you have an edge. P&L is not where the edge is. P&L is the output of an edge. If you're going up and down, it's because anybody can have winning trades. That's not the problem. The problem is execution, consistency, just like the casinos. They are successful because they don't make up trades. Or games. They just play the games that they know have an edge. They don't change them. Retail traders are continually changing and even using multiple inputs that are variable. So they're not all the same at the same time. This is where we're trying to go with this thing. Okay. So this is a Trader Lab structured long. But here's the thing about Trader Lab. There are traders who will not be able to take this trade because they haven't vetted it. As they develop in the Trader Lab, and in those 60 PDFs that I share, there's no cost for Trader Lab, you'll see all these trades. You will see trades, and then you'll be able to take derivatives of the behavior, because you'll understand how the market works. The objective in Trader Lab is to help traders understand market mechanics. Why is the market going to come back here? Maybe. And by the way, it's maybe. I can't predict it. But what I can do is understand how the market works. Most retail traders are put all their effort and energy into understanding and trying to get a basket of indicators to do the work. The work is not in the indicator, it's in the understanding of the market. Then, if you understand the market, when you get a condition like this, maybe then that's when you would deploy an indicator in alignment with market mechanics. Maybe. And then if you understood market mechanics, then the next part of this is you get risk neutral. You have a trade management process, whatever it is, that you vet, and you trade towards targets. And this thing can certainly come down, go up, do whatever it wants to do, because we can't predict that. That's really the business of trading, at least as I experience it. And I'm going on 45 years of doing this. And I spent years with different beliefs, and I then wrapped what I did around what I believed to be true, which is logical. I mean, we all would do that, right? I believe if I have the right mix of indicators and time frames that this is going to work. And the problem, of course, is it does work at times. So you think it's just a matter of persistence, tuning, tweaking, making it better. Well, you can spend years doing that. I did. And always wake up at the same place. I call it Trader Groundhog Day. And there's no magic bullet. I mean, if you want to be in the trading business, you're going to have losing days. You're going to hit your loss limit. Whatever is going to happen happens because it's random. Casinos pay gamblers. We're going to take stops. That's it. And it's no different than having a business that has expenses and overhead. And it's kind of like there is no such business where you just make profits every day and you don't have to pay. Casinos pay gamblers. We pay the other traders. Questions, guys? Please give a thumb up at YouTube, by the way. You're getting something from this. There's a link in the bottom of YouTube also next to the thumb or below the thumb. If you want to visit the Bookmap Discord Trader Lab community, it's a community of like-minded traders who come together to leverage their collective experience. It doesn't matter how you trade, by the way. And I will say, I don't know if there's a right way to trade. I think, though, if you're not a successful trader or you're just bouncing up and down, but not going anywhere, you might want to address that unless that is working for you. And you might be able to move yourself along if you develop maybe a more holistic understanding of how the market works. Why would we belong in the Trader Lab, and why would we be targeting the VWAP, the mid, and the VPON? If this was too high, and we find what might be too low, might we come back and check and at least get into the stops, which are VWAP, mid, and here? So that's why we are looking for this. This is called mean reversion. And the joke, of course, is, and you've heard this before, you've been following the stream, yeah, it's mean. What's hard is most retail traders do not understand this. It's called context. Very difficult. It was hard for me because you kind of get one-dimensional and you try to fit the market into a box. It gets directional like this, and then it gets rotational or mean reversion. How do you differentiate? With your indicators, are you going to be selling every little rotation up and taking stops, or would you know the potential, and that's all you got, come back here and here? If you don't know that, then you have some work to do. And I'm not saying you know what will happen. Do you recognize the condition of the market, and do you understand why this is the target? And do you understand why, if we come across, that we can still get out here? Do you end here? Because that was the target from the last long. Now, which remember, the last long was here, and then we got whacked over here. We got taken out of the long. The target was up here, and maybe even here. If I come across, my stops are sitting here, buy stops, and here. If I take the fuel out, everybody who's short here now is on the hit parade. That's why this is mean reversion. That's why this was mean reversion. conversion. This is the same trade from a different location to squeeze out these guys. And the thing about it is the fact that this was long, they got taken out. Who's now short? These guys. Where's their stops? Above the mid and above here. What do you think the possibilities are if I take a long here? It's to come back and squeeze these guys. And then maybe, or maybe not, get here. Does that make sense? This is Trader Lab. This is trading in fractals using the auction. Yeah, Costello, it's confusing. Yeah, it's always confusing because it's random. But, and look, when I see this and I'm below here, I'm also thinking we're going to take yesterday's low out. Why not, you know? But what is the trend? It's up. And I don't know. Here's what kind of sets it up. This is where the order flow is giving me insight that other traders don't have. Or at least, you know, maybe they do, but they're not telling, they haven't told me about it. This. Now, when I see this, I don't know, right? You want me to know? I don't know. For all I know, it can come down. It can just keep going. What it changes is in here. Here. So this is a suspect here. Break high. It's still a suspect. Here I see the buyers. Here I see the buyers. I'm seeing my buyers. This is all along. And then it's a matter of how you manage your trade. This was too low. This is that retail price. If I get long anywhere, this is where this trade fails. I mean, and this is not terrible. You know, it's a couple of points. And then all you got to do is get risk neutral. And then you're sitting here. And now you're managing your trade. Let's talk about where we are now. Let's go look at what's right here. Sellers were here, sellers were here, sellers were here. Stops are sitting above here. We want to be conscious of that. What can we anticipate? VWAP. And there's sellers here. There's absorption. There's the icebergs. So right here, you could be out of this thing here. Would you have a problem with that? I don't have a problem with that. Or, let me give you the yours. You could be out of this trade. Or, this is always the fun part of trading. Or, here, let me take you into the fractal. I think that you'll find this interesting. Let's look at this. I'm going to go down in fractal. This is like dropping time frame. As you guys think of time, I don't. I don't use time. What I use is auction or volume. So this is an auction. It is a consolidation. I'm going to draw a little box around it just so you can kind of see what I'm talking about. And this might be helpful because you guys understand consolidations, right? And what is a consolidation? It's nothing more than chop, chop. It's on sale. I'm not paying that. See what I mean? So too high, too low. Chop, chop, too high. Where's my volume? It's in here. You could see it there. This is what a consolidation looks like. It's a rotation. If I break out of it, it's a breakout. What's too low? The volume in here. If I'm trailing, I might keep my stop under here. Now what? Break high. Pull back to the top of the consolidation. There's sellers, right? Sellers, seller, seller. If I don't get under here and I get buyers above, what does that suggest? Up. So we got to see the behavior here. I've got icebergs selling, you know, and they do operate around the VWAP. So the thing becomes, where's the stops? It's up here. So we want to watch this behavior. So if you're long, you'd be scaled and you could just trail it. And again, when I say you, I'm talking about subject to your trade plan. Some traders are going to be out right here. They just trade back to the VWAP. Why would you get out at the VWAP? Because we anticipate shorts here. So we have to see the behavior. So your choice is target, out, or trade management. So we'll see. Does that make sense? Because there's no, hindsight's clear. In the meantime, you got to follow a plan and accept the random distribution of outcomes. We do know VWAP will have the following things. The market is attracted to come back here because it's kind of like neutral zone. It's where the balance is between buyers and sellers. I also know in the auction that this is the highest volume location at the time. So this and this are very similar because this is showing kind of where both sides are. You got the seller's average seller is above here, the VWAP, the average buyer is under here. So what we can get is if we come back here, we can get sellers here. Now, the thing is, and this is what retail traders do. Now, I don't know if they're right or wrong. It's not my job to know because I can't. What I know is I can anticipate behavior here. So I can use this subject to the number of contracts to scale ahead of it because I anticipate a counter rotation by these sellers. Now, if these sellers don't get any love and we don't fall through here, which we can, then their buy stops become fuel for this. So we'll see what it does. Let's hang out together. Do you guys have questions? And please, if you're in YouTube, give a thumb up. Down at the bottom, there's a thumb thing. Subscribe to the channel if you haven't, so you get notifications of Trader Lab, streams and other education that's available from Bookmap. All of this is at no cost. In fact, the Trader Lab community, use the link in the bottom of YouTube, you can visit the Bookmap Discord Trader Lab chat and community. There's no cost. You can download the 60 PDFs of these trades structures, and you can vet them. And you can also visit Trader Lab community and become part of a great community. It's serious community. It's not romper room. There's no holy grail. Doesn't exist. I go out on the internet like I'm sure you guys do, and it's like the only thing you do. Don't trade until you see this. This is the one magic thing. It's nonsense. And if hopefully you're not wasting your time chasing the holy grail. Doesn't exist. Now, if you have the Holy Grail, come over to Trader Lab and tune us in because wouldn't you love that? Have the Holy Grail and have an ATM in the basement. Wouldn't that be great? Doesn't exist. Let's look at behavior. This is our consolidation. This is too low. This is resistance, VWAP. I hold the top of the consolidation. So far, this is too low. I'm now above it. If I can get over the VWAP, I can now squeeze out to these locations, which are my next areas of interest, right? If I get above here, this is my next target. These are not, and it might only come, it might do this and just go into rotation. FOMC minutes are going to be released. No, not a big deal, but everybody, probably will put a helmet on. You never know. But this is the target, and you can just manage your trade. Now, if you understood how to trade this, and you can learn this, I believe anybody can learn to trade if they come to Trader Lab. I'm never going to say anybody can trade because it's going to take an effort beyond what you imagine to learn and to put the time in. Everybody wants plug and play. We're all in a hurry today. Well, if you want to be a competitor, think what it takes to play either a musical instrument in a symphony or speak a foreign language fluently or dance or whatever it is, however, analogy, sports. You want to play professionally, what do you got to do? If you're not prepared for that, trading isn't for you. I mean, I don't want to burst your bubble. This is not about a software package that has 150 indicators, and your job is just to find the right number of indicators and time frames, and now you're quote a trader. No, you're a visitor, in my opinion. You're just passing through. You're not a trader, and that will not, in my opinion, solve the challenge because that's what most retail traders do, and as we know, their statistics are abhorrent. I started doing the Trader Lab because of what I experienced. I experienced the same things as you. It just took me much longer because I had no information when I started. I started in 1980 and all we had was classical bar charting. technical indicators, Wells Wilder and all that was just coming into the mainstream. I shared an office with George Lane. He created stochastics. That's an oscillator, right? You guys have all heard of stochastics. It's an early oscillator, and I thought that was the holy grail. I said, wow, because it would cross over, and then look at that, the market moved. Well, as we all know, not that easy. We're going for this. Anyway, does that make sense? And I'm not against anything. What I'm for is traders having a true opportunity to build a business, not to go down dead ends and experience trader Groundhog Day because they see random behaviors and think it's just a matter of tuning and tweaking, quote, to make it better. Randomness times in a random environment creates just more randomness. And it's an analogy is garbage in, garbage out. So you've all heard that before, but that's the same in trading, garbage in, garbage out. So how do you step out of that loop? That's what Trader Lab was created for. So, and it's not for everybody because what's hard for us to do is change what we believe. I believed I was doing the right thing for years. And the thing is, I had success with it intermittently. I managed funds across a group of, managed a lot of dollars, and I did it across asset classes, and I built trading systems. And the idea was to optimize them. So, and for different asset classes. So I had multiple systems and for different, let's just say different asset types, bonds, S&Ps, currencies, whatever it was. And I did that. But they were always decaying because when you're looking backwards to try to fit something into what happened in the past, that's not today. Today's behavior is unique and separate from yesterday. This behavior right here at this moment is different than what happened 2 hours ago or yesterday, isn't it? So how can we use yesterday, other than a global overview of it, to, quote, predict anything for today? So that's what the change was for me, because I kept coming back and I wasn't solving. I was always coming back to the same issue. And I would get excited. I said, I got it now. And it would work. And then it wouldn't work. And it would work and it wouldn't work. And then I would see the decay. So I ended up where I was optimizing, doing walk forward, backwards chunks of data, walk forward testing. And you guys know about me. It's all on my primer webinar. I talk about this. And that's all, by the way, available to all of you at no cost. It's all the library of webinars in the Trader Lab. You can use that link in the bottom of YouTube. And download the 60 PDFs, by the way, of these structured trades, because that will give you kind of a understanding of some of this. Now, when I did these, I'm not a vendor. It was just because other traders were asking me about it. So there was never any intention on my part to do what I do here. It just wasn't in my plan. I'm a full-time trader, so that's what I do. So let's watch here. Microstructure is right there. We're still trying to get up here, okay? Now, again, what do you do with this? We know this is too low. We have a consolidation here. Let me get rid of this one. You can kind of see it. Let me show you this. I'm just showing you structure. This is how simple this is. Now, here's the problem. It is simple. It's not easy. Why is it not easy? Because it's random. That is what makes us lose our minds, because we crave certainty. We don't want to take the risk of not getting approval from the market, or of course losing dollars. But if we can accept it's uncertain, how do we stay in alignment? If we understand what it says. See, this is that language I'm talking about. I don't use the indicators. Well, what does it say here? Too low. What is it telling me here? Well, let's see. It's developing. I've got my micro high volume here. So let's see what it says about this. And it can do anything. Where am I trying to go? Here, right? This is the trade that we started talking about from down here. Now, do you find this interesting and potentially useful? If you can identify behavior. Now, for me, and I'm only talking me, I'm not saying you, I find if I'm going to risk 2, 3 points, whatever it is, and typically in this volatility be around 3 per contract, I'm going to get risk neutral. That's the distance from my entry to where it fails. So if I have to go a little more, I'll go 3.5, whatever it is. My target is I'm aiming towards this and trade management. So if the trade falls out under here, then the trade will be over. But what's my support? It's this. So I can just tuck my stop under here. Why? It broke high. It tested. My sellers were absorbed. My buyers took over. Support. Now what? Chop, chop in here. There's my volume. If I test this and I stay above this and I'm above this, what is this? Support. Where am I going? Maybe, not a recommendation. Here. Why would I come here? It's the highest volume. It's the retail price. If this is on sale, you go to the store for S&Ps and they got them on sale, and you know the retail price is here, highest volume. This is where the tuna is going for $1 a can, and it's 75 cents out here. You're going to throw a couple in the cart, and then the price, the sellers will raise the price back to where it's retail, where most of the business is taking place. Now, either this can shift, which says maybe this is too high, or we're going to come back and check it. Mid is here, I think. Yes. So we can pop the mid. What's at the mid? Stops in this. So this is important. This trade is either being managed, and we need it to clear out here, or this will become too high and will fall under. That's as deep as this is. This is what goes on in Trader Lab. You don't have to make trading complicated. It is random. So if you can accept randomness, you're going to take a mental load off of yourself of needing to be right and predicting what's going to happen. All we can do is look at what happened and manage our trade based on what we recognize, or a process. And it isn't what happens right here, right now. It's what happens on all the trades over a large sample size using process. And that's how you measure yourself and your plan, actually. And then your job is really just to execute the plan and accept whatever happens, because you don't control what happens. You know what you control? Your plan and executing your plan. You can change your plan. You can create a plan. That's what we do in Trader Lab. And you can follow a process of your plan that you have vetted, so you know over a large sample size what gives you a statistical edge. And where is support? See it? See how this works? I'm not saying it's good, bad, or indifferent. This is a process you can learn. So if I'm not using indicators in the classical sense, what's my indicator? My indicator is real-time, order flow, and participant behavior. So instead of using a derivative indicator that somehow, would your indicator say get short here? What would it be telling you? I don't have an indicator telling me to get short. I have an understanding of how the market works that says stay long, or get taken out on a trailing stop if it violates structure. I hope you're getting something out of this, and I hope it's useful. VGT, hi. Yeah, in YouTube. This works on all markets. Stocks, options, swing trading, jelly beans, doesn't matter. Because the market is made up of this. This is the fundamental process of how the market works, why it does what it does, and if you come to Trader Lab, how you can use this and learn it to create a process or a business plan. because this is business. This is really business. I mean, it's not a video game, and it's random. You know, the thing that's so hard, I'll tell you, I believe anybody can learn to trade, and I believe anyone who comes to Trader Lab and does the work, and yes, work, I mean, roll your sleeves up, be prepared to spend time. This is not a 2-week or a 3-month process. If you want to be in a business, you got to learn. You want to be at a top level performer in anything. Think what it takes. That's what it takes. If you're not into that, or you're looking for the shortcut, which we all want, I get it. This isn't for you. And trading probably isn't for you either. It just takes much more because of the randomness. This is so contrary to our primal wiring. We are seeking certainty. And the marketers out there in the internet space, they're all selling certainty, prediction. Why? It doesn't exist in this business. Why do they sell it? Because that's what you want. They are marketers, and you're going to see it all over the place. The other thing that's really difficult is what I do and you do are not going to be in alignment. I may trade out here. You may say, I'm not going near this thing. Why? Because you haven't developed yet that structure to operate in, or the confidence, which takes a long time to actually believe in something. Because right now you don't believe a lot of things, and you probably don't believe this would work for you. You might not believe, and I mean the collective you, that you can learn this, that it looks too random. How about this? The market is random. That is never going to change. When in the casinos, when the dealer deals the cards, they're random, and the gamblers play the cards randomly. How can they predict anything? They can't. So what do? They just play games with an edge. This has an edge if you do the work, so you understand how it works, and you're going to take stops. You're going to get taken out of great trades that go on to targets, and it gives you the little wiggle, and you're taken out, and then it goes on. If you don't have another way in, you just sit here and you go on to the next hand or trade. Where are we trying to go with this? Here and maybe here. Not a recommendation. Now we have something called VPOC migration. This is resistance now. So we can either push off this way or come here. If I get above here, I still have fuel to take me up here. This is called structured trades. Structured trading, it's Trader Lab trading. It's based on the auction, how the market works, and structured trades, as I shared in those PDFs, and the library of webinars. Guys, there's no shortcut. If there was, I'd certainly be interested in it myself instead of spending 45 years. And now I've been doing this process that you're seeing here. I learned market profile in, I think, 85, 86, something like that. So I worked with that. I actually learned it from Peter Stadelmeyer. He created it. So I have a lot of background, but I really didn't get it until I added the volume to it, and then I made it. A lot of what I do does not exist. I don't know, or it certainly didn't exist when I started doing this stuff. I made a lot of it up. I made up my own terms because they didn't exist. And I also found that I had to learn to think for myself and be flexible. Not take somebody else's thing as dogma. I had to find and interpret it in a way that I could align psychologically. That's why there's no plug and play. If you come to Trader Lab, I think you're going to find a great community of serious traders that have come together to build out the business of trading. You can leverage that community. It is not nonsense. It is not romper room. In addition, there's those 60 PDFs you can download and a library of webinars. Start with the primer webinar. The link is in the bottom of YouTube. Please click that link if you're interested in visiting Trader Lab. There's no cost, plus a lot of additional education, stocks, options, crypto, order flow with a high-tier tool like Bookmap, market maker behavior, options, swing trading, and a lot more. And also, please give a thumb up on the way out. And remember, these streams are available exclusively to the Bookmap Discord Trader Lab participants. to reverse engineer, screenshot, and develop your plan. We're always working on getting better. I'm always going to be working on getting better because you never get to where you want to be. Any athlete, any high performer is always going to be motivated to get better. Are you motivated to get better? Visit the Trader Lab, see if it resonates with you, and I'd look forward to seeing you in Trader Lab. Thanks, guys. Thanks for visiting Trader Lab today. Thank you visiting in YouTube. Give that thumb up on the way out. I look forward to seeing you guys soon.